Welcome back, and joining us now on the show is Peter McGuire, CEO at XM Australia. Peter, hi, good to have you. And I'm looking at metals and the kind of reaction that one would have expected but didn't come because after the Chinese cut interest rates yet again. But it really is the quantum, isn't it? 5 basis points and 15 basis points for 1 year and 5 year doesn't really cut it.
Exactly right, Manisha. Good afternoon. I don't think it's any surprising news. In a lot of ways, it's probably underwhelming, isn't it? And when we take on board what the situation is in China, it needs a lot more than that.
And the stimulus is something that we've been waiting forever. I mean, there have been a lot of conversation about it on how infrastructure and construction and SMEs would be supported, but that is also yet to come.
Exactly right. You know, and they've got their hands full with the property sector, what's going on with energy demands, weather outages, and everything that rolls into that with high gas prices. So, yes, we've got some major issues across the China basin, and I think it's going to be a tough next 5 months leading up until the end of the year. You still haven't put COVID to bed, Manisha. It's still, you know, very much on top of everyone's radar.
Oh, well, yes. And, you know, the top 3 lines really are on China. The next one, Peter, really is about the power rationing that China really seems to be putting out, the kind of drought alerts that they've put out for the rest of this year. Yeah. How are you reading into that?
Well, it's immense. You've got major weather outages and you've got extremely dry conditions across a lot of China. So the demand is very, very strong. And there seems to be a major concern. You know what the coal consumption's like. It just knocks it out of the park, you know, massive numbers. And the overall situation is it's got a little bit of a power struggle at the moment. Electricity demand is so high, and the overall picture leading forward could be quite dire for a lot of the commercials as far as production, supply chain issues, and all of that's going to take an impact.
And then it doesn't help with the dollar index trading at a 5-week highs above 108. Yeah,
exactly. I'll tell you what, it's been bullish for the dollar over the last, say, 3 to 4 sessions. And I think the way it's going at the moment, I've got a 109 handle sometime this week because it's just strong. We've got the symposium in a couple of days' time in Jackson Hole. I'm not suggesting we're going to see any surprises from Jay Powell and his gang. But I think the overall momentum, it's the best out of a bad bunch.
Clearly. So when you look at the metals as a sector, and while the month of July was all right, because we did see some rebound from the kind of lows that we did hit, but the last week, or rather, let's say the previous week, clearly saw some selling come back. Have you turned bearish? I mean, have you turned into shorts again?
I don't necessarily think I'm bearish. I'm sitting on the sidelines just reviewing it because you saw such a big uptick over that, you know, some of those metal prices, understanding what copper did, and naturally, you know, the likes of zinc. So I think it probably outgrew itself. It was so dramatic, Manisha, that it's a time possibly for consolidation. We've got major issues. The German situation at the moment, and you've got a 500-year drought. You've got major concerns across their supply chains and their demand picture from energy. So the world is in a pretty tough way moving forward. I'll look at the PMIs. You've got them coming out this week, and it's not a good time to be in Eurozone or the UK.
Clearly. And what's your sense also on the energy prices? Because we've seen declines extend here yet again. Crude was down 2.5% in the previous week, 1.5% down yet again today.
Well, yeah, but it's still, you know, it still seems to be range bound 90 to 100 for WTI and Brent. Well, I take your point, and I think there is a little bit of, you know, a nice feel for consumers. Down a couple of bucks. It's probably going to be down 20 or 30 bucks to really feel it at the petrol pump. And the other side is that whilst that's going down, you've got nat gas screaming to the upside. Have a look what it's doing. So, yeah, I think that there's the trade at the moment. Everyone's long gas. And I'm just having a close eye on what's happening as far as weather outages with possible hurricanes starting to tick up later this month and certainly into September.
How are you looking at the Iran and the West nuclear accord, the deal, which reports say that is now pretty done? How are you reading into various reports on that?
Well, I mean, hailing it, Manisha, it's an ongoing, you know, moving target, and I'm conscious of it, and I'm just going to see how it all drops. You know, it's It's easy. It's easy to look at and be objective, but the other side is it's got to be, you know, absorbed by the marketplace, and all those moving parts need to be put to bed. So I'm just going to see how it all plays, what impact it has to overall geopolitical, well, not suggesting tensions, but the geopolitical situation across the Mideast, and certainly with Iran, and yeah, just how all the eggs get laid, Manisha.
Okay. Peter, final question. So if I had to really pick something in commodities, what is a better trade according to you?
I reckon nat gas. I think the demand picture, I think it could be very, very strongly bid up from here. And naturally, the gas prices in Europe are, you know, incredibly high. And I think there's even further height to go due to weather outages and the likes of supply chain disruptions and what we're experiencing with Russia.
Okay.